Hey everybody, it's Hussein Kabani, your favorite broker, and today I want to talk to you guys about closing costs. I know we've talked about closing costs before, but you guys might be new to me, so we're going to go through it again. And I just want to highlight one or two areas where some of my clients recently have kind of forgotten about what we've talked about, and they've kind of got surprised when you receive your statement of adjustment from the lawyer. So just to kind of recap, so if you're buying new or resale, what's going to end up happening is that you're going to have some type of a deposit for this purchase. And what's going to happen is when you get closer to the closing time, maybe a few days prior to closing, your lawyer is going to send you something called a statement of adjustments. And it's an accounting statement. So the debit and the credits all have to balance out at the end of the sheet. So what happens is that they have your purchase price, they have less your deposit, and how much is actually being owed. So out of all of this stuff, it's going to itemize where all your money is going to and how much money you got to bring into the lawyer to close a transaction. Now, some of the stuff that we got to be looking out for in the closing costs is, the first thing I would say is down payment. So maybe you have a $30,000 deposit on the agreement for the property you're going to be purchasing, but your down payment is going to be $60,000. So the balance of that, the $30,000, you're going to have to bring it in on the day of closing. Another thing that you're going to have to be paying for is the land transfer tax. So if you guys are first-time home buyers and you're buying outside of Toronto, you're going to be getting a $4,000 rebate on your land transfer tax. It's not that you have to pay it and then you're going to get rebated. It gets rebated right on the spot. And then with Toronto, it is a double land transfer tax. So you got basically double the tax rebate on whatever you're going to be purchasing. So up to about $8,000 for Toronto land transfer for the first time buyers. So you're going to have, aside from that, you're going to have your lawyer fee. So remember, with lawyer fees, when you're purchasing property, the lawyer fees are a little bit more than when you're selling. The reason for it being more when you're actually buying is because there is a little bit more due diligence that goes in and some other things that your lawyer is going to be purchasing for you, like title insurance, and they're going to be doing a lot more of the title searches and the due diligence for you when you're purchasing real estate. So it is a little bit more expensive to buy the lawyer fee when you're buying versus when you're... Another thing you're going to have to pay for is when you're purchasing real estate, and this is where one of my clients earlier this week got kind of thrown off a little bit, is that they were going to do basically a minimum down payment. So they were purchasing a property for $720,000. Their down payment was about 6.6%, 6.5, 6.6%, somewhere in that range. And what you basically have is you can do that down payment and you're going to pay roughly a $27,000 insurance premium. So that's because you're not putting at least 20% down. So on the $720,000, it was about $27,000 that you don't pay up front, but that gets added to your actual mortgage. But what you do pay up front is you pay the PST. So now we know we got HST, but if you're not aware, before we had GST and PST. So PST is still applicable to insurance policies. So this is an insurance policy and you would have to pay that HST upfront. So that HST on that insurance policy is about $2,150. So that would go part of your adjustments. Another thing sometimes people get, confused about is this. Say, for example, you're buying a property. It could be from a developer or it could be from a resale. The owner may have already prepaid some of the property taxes. So, if the owner has prepaid, say, a month and a half of property taxes already, then what would happen is that on your statement of adjustments, you would see that the current owner has paid, a month and a half of property taxes. That has to be adjusted back to them. So on closing, you could be paying that as well. Another thing is not just property taxes, but it could be also condo fees. So if you're purchasing a condo, say for example, it's $400, just roughly, it's $400 a month for a condo fee. You're buying it halfway through the month. They've already paid that $400. So on your adjustment, you would be paying them back $200. So it's something else to be aware of. With new builds, you got to be a little bit more careful with it because it's not so much that you can calculate. There is a lot of little things that you don't notice. One of the things with new builds is that you got to pay a carry-on registration fee. That could range somewhere between $1,000 and $2,500 depending on your purchase price. So there is a carry-on registration. If you're not aware of what carry-on is, it's a new home builder warranty plan that's like just quickly, they say it's 7 years, but in my opinion, it's really good for your first 2 years. 1 year years, like a bumper to bumper warranty, 2 years, most of your mechanicals are covered. They say 7 years. A lot of people are like, oh, I got 7 years home warranty. It doesn't really work like that. Your house really got to fall down for it to be valid at that point. But anyways, you're going to have to pay a Tarion registration fee. And the other thing is that builder closing costs is a little bit different. So there's a lot of unknowns. Sometimes builders right now, because they want you to sign an agreement and they want it to be firm so you don't have time to actually review it with a lawyer and do all your math, they're doing something what they would call as a capped closing costs. So, if you're buying a condo, maybe they're saying, okay, a 1-bedroom condo, we're going to cap the closing costs at $3,500, which would include like a parks levy, a development levy, a school levy, parks levy. All of these things would be baked into it. And sometimes they don't cap these things. So you could be in for a surprise. I know my brother bought a condo before and it wasn't capped. And, the closing cost was a couple $1,000s more than what we anticipated it being. And there is really no arguing with the builder at that point. You got to kind of pay it because it's in the agreement there. So you got to be kind of aware of that. And remember, when you're buying new construction, likely they're going to charge you for the hydrometer, the gas meter, the water meter. They're going to charge you for all of these things up front. So you got to be really aware of what you're paying for, and you got to be prepared to pay that. It's not like you have a lot of time once they send you the statement of adjustments. I think you'd be lucky if you have 5 days to come up with that money. So it is something you really want to plan forward for. So that's basically covering your closing costs so you don't get caught off guard. If you guys have any questions about closing costs, feel free to reach out to me. Send me a DM, write me a comment, like this post, share it. And remember one thing, guys, until next time, get Cabani, get sold.
Sell it, sell it, sell it, sell it, sell it, sold. Sell it, sell it, sell it, sell it, sold. Sell it, sell it, sell it, sell it, sell it, sold. Sell it, sell it, sell it, sell it, sold.